Hello traders, Cousin Vinny coming to you from theclosingprint.com on August the 18th, 2019. In this edition of your weekend video newsletter, we'll discuss the markets which pulled back earlier in the week but staged a big comeback on Friday, overcoming several culprits behind the recent weakness. Small caps led the Friday rally as the blue chips advanced 2.2%, but couldn't overcome the overall weekly decline of 1.32%. The Nasdaq chipped in 1.7% on Friday, while the S&P 500 and the Dow Jones average trailed the gains with 1.4% and 1.2% respectively. Volume in the stock market on Friday ran lower despite the options expiration, OPEX Friday, which normally boosts volume. The biggest problem we had, of course, was the 10-year yield dropping to lows that we haven't seen since 2012. Big cap tech stocks, the FANG stocks, did manage to move a bit higher on Friday. Apple was up 2.74% on the week, Nvidia 3.49% on earnings for the week, and Intel was green by the end of the week, 1.13%. Most of our indicators are neutral to slightly bullish. As we move into Monday trading, US dollar is near highs at 98.01. That bullish pivot at highs on Friday could turn back down, so watch your gold stocks. Those might actually bounce this week. The bonds, AGG, SHI, IEF, TLT, all of the bonds are pretty much parabolic. If the yields start to turn higher this week, watch for bonds to turn back down. Gold is still bullish, though it did fade a bit. Copper did bounce, and West Texas crude and Brent are below their 20-week moving average for the past 5 weeks, still showing no follow-through to the upside. The sector heat map has been improving over the last couple of weeks, along with the international markets. China showed a bit of strength last week as well. Watch those Chinese stocks. We'll look at some IBD50 names and some MarketSmith Growth 250 in white. TTM squeeze candidates in yellow, and RVOL or relative volume candidates that are showing above average volume, and in play stocks in green. Bukowski is showing 5 of 5 of his indicators green with CPI at 92.9%. That's bullish with 2 bearish patterns, 26 bullish patterns, and 467 patterns waiting for breakout. Bottom line, we'll start with a bit of caution. We're looking for a little bit higher, but the 10-year yield is going to be predominant in our minds as we begin Monday and Tuesday trading. Okay, let's start off with the S&P 1500. This is the S&P 500, S&P 400 mid caps, and S&P 600 small caps. The upper panel is the high-low percent cumulative. This is a breadth measurement, a broad-based look at the stock market, 1,500 stocks. Whenever this indicator flattens and rolls over below the moving average, that's a neutral to sell signal depending on the severity of the move. We do start to get cautious like we did 3 weeks ago. As this indicator started to turn red, that's why we're selling into strength. The histogram is a confirmation signal. You can see it's back above green, so this is telling us to be neutral, but open to the idea that we could move further to the downside. Okay, so this is something that we're watching first off to start the week along with the 10-year yield. We also want to watch the S&P 500 equal weight index with no emphasis on any big cap tech names or stocks that institutions favor. This gives us an equal bearing and something to measure. Price action came back down to the 200 period moving average 4 times. We're back above it on Friday. We can see that the number of stocks trading above their 50 period moving average is at 37. Moving higher, so we're not at extremes, but breadth has a lot of room to the upside to improve. We're watching for a trigger down here with CCI. If this does follow through, you can see previous vertical trigger signals here. What happened thereafter? In all cases, we did follow through, some longer than others. Something that we want to keep an eye on. We'll look for that trigger this week, and we'll look for the S&P 850R to continue to move higher, showing that more stocks are participating in any move that we see to the upside. We did close on Friday at the 9 EMA on the spiders. We couldn't get above that 289 level. We did briefly push above it. That's where we sold into that little pop at the end of the day. Our 289 calls did very well. The 286s, some of you were trading the 287s. All of you did well if you sold at the end of the day. We showed potential drawdowns of 7.35% down here at 280 and 10% at 272. That's still a possibility if we get rejected at the 20-day and the 10-year starts to spike lower and algorithms start to trade to the downside again. So be aware of it. But if RSI does manage to move above the 50 level, it'll be a product of price, of course. And we'll be looking for a test of the 291.79 level with an expected move of $5.87. I know Vanter had mentioned, I believe, 58 handles on the S&P futures for the week, I believe, which makes sense. So upside target 294.72 and a lower target of 282.98 if that expected move is hit to the downside. So that's down here where we have these pivots and where buyers had stepped up 3 times before, as these lower wicks depict. Finally, we have the spider Renko chart. It's showing red bricks now, so we're going to need a pretty strong move to the upside to print a white brick. Right now, we're basically neutral to slightly bearish, showing the potential that we could move lower. Renko removes the noise out of the market and only prints a red brick or a white brick, where our average true range rises or drops to a level that prints a white or a red brick. Just one of the many indicators we're aware of each week. The Nasdaq and the S&P 500 both showed wicks at the lows at a 618 Fibonacci level, just above the moving averages. These buyers show that there's a potential for higher with a stop if we lose these levels in the short term. RSI is above 50. We'd like to see that turn up as a product of price, and we'd like to see increasing volume. MACD has turned back down and it is below the signal line. So we'll watch for this bearish divergence to reverse and move higher along with price action, despite the fact this is the weakest month of the year for stock trading. Small caps did bounce on Friday, but they were lower on the week, closing down by 1.32%. Notice where RSI is, it's below 50, so we really need to muster some strength here in order to stay on the long side. IWM is a risk-on indicator. We'd like to see strength. We did see for the past 2 weeks, just like the Nasdaq and the spiders, buyers down below this level. So there's an appetite for risk, even though weekly volume has been pretty high and bearish, along with MACD turning back down and below its signal line. The daily shows the overhead resistance that we have to deal with. There's a lot of chop overhead, a lot of overhead supply, and most likely we get rejected. It's probably going to take quite a while for us to move through this area, probably another 2 weeks into the end of August. We'll start the September, October period where stocks generally move higher. Suffice to say, IWM has its work cut out for it over the next few weeks. Short term, the VIX indicator is giving us a green light. This is a 60-minute time frame. As long as this stays green, we would expect to see the 60-minute continue to move higher, the spiders in the upper panel, with VIX daily showing this double peak and fade, closing near the lows of the session, nearly a gravestone doji on Friday. If this continues to mean revert back towards the 50-period moving average, the blue line, I would expect to see the markets push through the 9 EMA and the 21-day overhead, potentially create a higher base for the S&P 500. If we see VIX stay up in this zone and volatility stay as high as it is currently, then we could see a lot more chop and tests of the lows and the highs in the short term. So we are very keen to watch the 10-year yield, the VIX, and other developments as the US dollar and commodities trade. We want to watch the money flows. We also want to keep an eye on skew. This is a measure of out-of-the-money options being bought. In particular, we're curious to see what happens with this low here, which is telling you that hedge fund and fund managers are not that concerned about hedging. When they're above 135, they're hedging. When they're below 120, they're not worried about hedging at this current volatility level. They'll buy cheap out of the money options when volatility is down in the 11s and 12s. So back here in September, October, we can see they were hedging heavily as the Fed started to get more hawkish. This was before the Fed signaled, and of course they started taking those hedges off as the markets dropped into the December lows. Yet we're nowhere near that at the present time. In addition, we did see the put-call ratio, the total put-call in the upper panel. You can see the blue circles. We actually traded much higher than the upper Bollinger Bands, closed lower by the end of the day. The significance here is whenever you see these spikes to the highs, look at this last vertical, you can see very shortly thereafter we got a nice rally. We saw something very similar on Friday, which could lead to more follow-through. Same thing with the equity-only put-call ratio. We're nowhere near the lower bands. The lower bands are where we would see potential rollover. You see the red line. Shortly thereafter, we rolled over when everybody got bullish. This is everybody getting bearish. This is everybody getting bullish. So even with index-only put-call, when we hit the lower Bollinger Band, that's where you want to be concerned about a market about to roll over. Not at the present time, using this simple benchmark and measurement. In addition, we want to keep an eye on the number of stocks making new highs minus the number of stocks making new lows. That's what the NYHL does for us. As long as we're above the zero line, that's telling us there's more new highs than new lows, so be open to the idea of a push higher. This can change intraday. Watch the NYAD, New York Stock Exchange Advanced Decline. With this additional way of looking at it, the red area is the 10-period simple moving average. Whenever we move out of the red area, that's bullish. Whenever we're inside the red area, that's bearish, of course. So we look for these moves outside and follow through in the short term. Yet another indicator that's more bullish than bearish at the present time, slightly neutral. Additional benchmarks like the S&P 500 and the top panel between the 50 and the 200 period moving averages, of course. In the lower panels are the S&P advanced decline percent, hitting lows below 30%. We look for reversals at that point. You can see that's what happened. The S&P mid cap in the middle panel, the S&P small cap in the lower panel, and then of course all the way at the bottom the NASDAQ advanced decline percent. All of these registering moves down below the 30%, with the exception of small caps, which did manage to show a little bit more relative strength. So we're watching for breadth to improve along with price action and see additional volume, all of which would help us with additional breadth indicators like the NAMO, the McClellan oscillator for the NASDAQ 100, showing potential signs of a hook or a turn in the cycle. If the cycle turns bullish, it'll take a few days, maybe a couple of weeks, before we see this really start to turn like it did back here at the last opportunity where the NASDAQ rallied from the 7,000 level up to the 8,000 level. With NYMO for the New York Stock Exchange, 2,000 stocks, we'd look to see this indicator also turn like we've seen in previous occasions, marking lows and follow-through potential as breadth improves for the weeks ahead. With this in mind, we can now look at some of the other areas where money flows, like bonds, commodities, and currencies, or Forex. Here is the S&P 500 10-year bond stock ratio, UST to SPX. We see this line still moving higher. That's bearish for stocks in the short term, bullish for bonds as bonds are favored. And the short-term yields playing on our minds. We have the 2s, the 10s, and the 3-month all moving lower. That needs to reverse in the short term. if you're bullish equities. So all the previous discussion on the indices and the indicators that we're watching, those are bullish to slightly neutral. They're not bearish at the current time, but we need to see bonds turn. We want to see money flow back into equities, which is one of the reasons why we're keeping an eye on the 10-year yield. We talked about this quite a bit last week. We were approaching these 2012 lows intraday, moved back above those levels on Thursday and Friday. We have to be open to the idea that this could move lower before reversing. When it does, we'll look for a pretty significant appreciation in the S&P 500. The previous two times this occurred, 2012 and 2016, led to 44% gains in the S&P 500 in the months that followed. And one risk-on indicator that's telling us to look for these bullish continuation bounces in the 10-year yield and the S&P 500 and equities in general is the strength in HYG and junk bonds. These two signaled continuation moves lower when they lost the 20-period EMA on their weekly time frames. They're holding up, which is telling us that investors are chasing yields in these two instruments, HYG and junk bonds, as the markets see yields move lower. So if these start to bounce, that would be bullish for equities in the short term. If they were to move lower and take out their 20-period moving averages like they did in the past, October, November, December, then we would say, okay, it's time to expect more downside. A bounce here is bullish for equities. If that were to occur, then we would see bonds like AGG, IEF, the 7-10-year, the 20-year TLT, or the 30-year bonds all turning lower. They're quite parabolic at this point. We got into these back in October. We still have a position in AGG and TLT on the long side. But if you were trading this as a stock position, I doubt you'd seriously be putting a lot of risk on the table and chasing this higher. You'd probably be looking for a pullback in the short term. I would venture to say fund managers and institutions are thinking the same thing. As Main Street chases bonds higher, I assure you that institutions and fund managers are thinking about taking profits into strength. I would say about 95% of the bond move is over with and already baked in. We'll probably see yields move higher. As a result, we could see TLT doing the same thing. Very parabolic, most likely comes back in the short term. We'd expect to see the US dollar moving lower from this pivot at the upper bands, thinking this could come back to the 20 period or the 50 in the short term. The 200 MA is still moving higher, with price action in the US dollar still creating a headwind for internationally based companies that report in US dollars here in the States. So any move lower most likely would create a tailwind for those same stocks in the short term. And with that weakness in the US dollar, we should see copper moving higher. This is an economic indicator. I did notice this weekend that the Fed had revised upward its GDP numbers. So I think it was 2.6 from 2.2 or something like that. Godfrey Ophir posted that in his stream this weekend, if you happen to check it out. As we go into Jackson Hole meetings this week, we also saw gold moving higher last week, following through. Some gold stocks and gold miners did pull back just a bit, but this trend is certainly bullish, a little bit overbought from a perspective of RSI, but lack of supply at these levels and volume looks pretty decent. MACD's above its signal line for the gold trade. Then, of course, we have crude oil, which has been spending the last 5 weeks below its 20-period moving average. It's turning over, looking more bearish in the short term. If crude oil were to drop off substantially, that would create a drag on the S&P and the U.S. equities in general. If you're bullish, you want to see crude oil moving higher, not lower. The sector heat map has been improving over the last couple of weeks, along with the international markets, with China leading. with real estate and REITs performing quite well, near highs. Transports bouncing on Friday. Biotech holding these lows, bouncing on Friday as well. Materials, gold, steel, copper, etc., those moved higher as well on Friday. The communications sector moving higher. Energy showing it needs to improve as well, with financials, banks reversing back above the 200-period moving average in the short term. Industrials showing the same potential with a hammer on Thursday, followed through Friday above the 200-period moving average. Technology hanging in there, looking for a follow through this week, maybe a test of the 21-day or the 20-period moving average overhead. Was on lower volume, so we'll look for that. MACD to turn and move above its signal line. Consumer staples, of course, we saw a lot of stocks like Coca-Cola, Kellogg's, General Mills, Procter & Gamble all moving higher last week. Electric utilities, multi-utilities, water, many of those moving higher as well. They're interest-bearing stocks, many of them. Looking for higher, along with healthcare pushing back above the 200-day. And of course, consumer discretionary, which if you're bullish on equities and the economy, you want to see this turning higher in the short term, and retail picking up a little bit more bullish favoritism in the short term. Here is the IBD50. We're looking for stocks that are remaining above their 20-period and 50-period moving averages. Stocks that may have tested or bouncing above, following through their 20-period moving average, like we see with ACGL, Arch Capital. We also want to see volume, showing that the stocks are in play as positions that we'd like to trade this week. Arch Capital, ARES, both showing potential. Brown and Brown following through. We'd like to see volume, see how price action is holding the 20-period moving average while staying in this bullish trend. The probability that this follows through with RSI above 50 is fairly high, especially when you see volume coming in that's showing the stock is in play. So we'd like to see that continue on Monday and Tuesday. So a bullish day on Monday would be a nice long setup with a stop below the low of the day, opening range. Continue to move that higher from the start if you're just starting to take a position in a new name, considering everything we've already discussed about equities, bonds, the 10-year yield, and all of our signals being slightly bullish to neutral in the short term. Baozun has earnings this week, back above the 20-day moving average. RSI is about to push through 50 and rise. I got a feeling this is going to be much higher. I'm looking for a follow through into earnings, as this stock is well off of all-time highs. So any good news, like some of the other Chinese stocks, Baba, Huya, following through on earnings, I'd look to see. I'm looking for Baozun to be up near the mid 55s in the next couple of weeks, if their report is even slightly bullish with good guidance. Care Trust REIT, all of the REITs, if you remember the sector chart, all looking very bullish. Above the 20-period moving average, RSI is rising through 50. Volume is showing the stocks are in play. I would assume that we're going to see a follow-through on Monday. That would create three white soldiers, a bullish reversal pattern and continuation setup. So we'll look for that on Monday and Tuesday. Stocks like Chegg, we do like the name. I don't like trading mean reversion per se, especially when the stock is below the 20-period moving average and the 9 EMA. RSI is turning, but it's on lower volume, so it's showing me there's less interest in this name at the present time. Once it gets above the 20-day, maybe we'll take another look at it. Keeping an eye on restaurants and bars, that whole industry group. CMG looks good, but the volume has been tapering off as we pushed a bit higher. So less participation in the name at the present time. I like seeing this kind of follow through right in here that we saw at the end of July, where the stock followed through, hit the 20 period, pushed higher again. We tested the 20 period last week. I just like to see more volume. Comcast, same idea. I like the stock, but I like to see more volume. So if this starts to pick up the sizzle index starts to move higher above, say, 1.5 to 2, that being on your Thinkorswim platform. Sizzle index just telling you short-term options flow is becoming more bullish or bearish. In this case, we'd look for a higher sizzle index showing that there's more calls being bought. We'd like to see near-term options indicating that we see further upside. Until then, Comcast is just another trade that we'll look for confirmation in the short term before taking any positions. ESNT, another stock showing you what I'm looking for. A follow through above the 20-day moving average, RSI above 50 in this case, volume coming in, showing the stock is in play, and a very high sizzle index. This one I believe was 2.25. Pretty high, showing that short-term options have seen bullish flow and indicate that we could see some follow through on Monday and Tuesday. With all of these indications helping to improve our probability of a follow-through, if you have a high sizzle index, you have stocks higher on above average volume, bullish above the 20-day, post earnings with a beat, in addition to RSI above 50, you're stacking all of the odds in your favor. Instead of it being a 50-50 shot, you stack your odds 75-80% probability for your stock to do what you think it's going to do. Now, I wouldn't chase Huya here. It is on the list of stocks that we're watching on higher on above average volume. Look for a test of this overhead level, maybe a flag at some point. If we get a flag Monday and Tuesday, that would be a nice respite to look for a follow through. We could have our stop just below that flag and then look for a follow through confirmation. Just don't chase it at this point. It's just an example of a stock that's in play, watching this volume push the stock higher. NVIDIA, while not on the IBD50 this week, does show a lot of the things I'm looking for. Price action above the 20-day, higher post earnings, volume is pretty substantial. The sizzle index is very high. The stock is in play. The probability of a follow through would need to be confirmed with higher volume again on Monday than average. It doesn't have to necessarily take out Friday's volume, but we do want to see something like we saw back here in June and July on a follow through as a potential trade with the sizzle index north of 250, I believe. And the put call ratio at 0.66, showing you there's more option volume on the call side than put side for NVIDIA. A high stock sizzle index is telling you that there's a lot more calls being traded. We're looking for the follow through and might take a trade on NVIDIA as a result after we see how the Monday and Tuesday trading goes. PagSeguro, another stock that many of you have been trading since this previous breakout over here and here near the 20s and the 30 level. Following through, good earnings, RSI above 50, follow through, volume showing the stock is in play, institutions are picking up shares. I'd look for a little pullback. Hopefully we can get that on Monday and Tuesday for a potential entry. PagSeguro also showing a pretty high sizzle index at 2.6 with open interest, the highest at the 50 strike for September. Looking for those in the money options to continue to profit in the short term. Rexford Industrial Realty, another REIT showing follow through and favor as the stock is in play. Volume is increasing, turning higher. We got ADX green above ADX red. ADX pretty strong at this level, showing this trend will most likely continue. Every time it pulls back, look for a follow through as long as RSI stays above 50. Solar Edge, the solar saw a lot of strength last week. I know Susie was looking at CSIQ. I like Canadian Solar. First Solar not doing as well. RUN, Sunrun not doing as well, but Solar Edge and CSIQ both look like they could see some further upside. Visa's back on the IBD50. It's above the 20-day. Not my favorite setup. RSI above 50. Looks like we could see a follow through. Volume increasing. Sizzle index is higher as well. Watch MasterCard, Square. Square is another one that I wouldn't mind trading this week if we get a follow through. We talked about this on Friday. This potential reversal zone as it's basing out near a previous low. RSI is oversold. Not my favorite setup. I don't like mean reversions per se, but if we start to see a follow through, we could get a push through the 9 EMA, then a test of the 20-day overhead. So you have a potential 6 to 7 point move here in the short term. Workday also has earnings in the near future, so keep an eye on this one. It's through the 9 EMA, nice bullish candle, above average volume, high sizzle index, stock is in play, RSI is rising. Look for this to continue higher. I like these stocks going into earnings that aren't at all-time highs, so they're not priced to perfection. Any good news, any good guidance by the corporate management could lift this one back up to 52-week highs over the next several weeks into October, November, and December. Zito Express also showing up on a number of scans, looking for this to follow through. RSI is rising, volumes increasing. Again, not my favorite setup. It's something that we're keeping an eye on. Additional stocks we're watching this week. MarketSmith Growth 250 showing relative strength. RSI line rising. Above average volume. Good annual sales and earnings. Decent IBD metrics. This is one that's piqued our interest. Cyrus One, a REIT that operates and owns, develops enterprise class carrier neutral data centers in the US, London, and Singapore. Very important business to be in the years ahead. Looking for follow through here. General Mills, mentioned by David last week, showing a lot of options interest. Sizzle index moving higher. Above average volume. Relative strength line climbing. Good annual sales and earnings. Decent IBD metrics. Don't need to tell you what they do in the consumer staples industry group, which is trading at 52-week highs. Looking for a follow through. It's right at the buy pivot. Looking for a follow through. Just add 20% to the top of that 54.74. That gives you the 20% target that IBD traders usually look to start taking profits at in the short term. So 20% would be about 10 points on top of that, so 64 basically. Grocery Outlet Holdings Corp, GO, owns and operates over 300 grocery stores in the United States. Interesting follow through here. I wouldn't chase it, but we're keeping an eye on this one. I wonder if there's some interest in someone buying out this new IPO. It's on a tear. Nice little beat. Annual sales and earnings increasing. Too new to really calculate some accurate IBD metrics for me, but it's something that showed up on the scan. Relative strength line climbing at 99. Info, INFO, IHS Markit, UK-based provider of financial information services such as pricing, indices to the financial institutions. The green area is the profit. Here's the breakout pivot level I was just talking about. Add 10 points. Add 10 points to that. You got about a 20% move. That's where you're looking to take profits. This one's still going. Relative strength line climbing. Good annual sales and earnings and top shelf IBD metrics. Looking for higher volume this week as a confirmation. Purely if you're thinking about trading this one over in the UK, look for the FTSE to be moving higher and the London Stock Exchange. Maybe this one continues higher as well. Prologis showed up on the blue dot relative strength scan at 88 and climbing above average volume. Good annual sales and earnings. Good looking IBD metrics. Could improve a bit, but the stock is in a flat base. Looks like it could test this high. Add 20% to the top of this, about 16 points. That gives you your profit zone overhead. Looks like a breakout pivot coming. Above average volume is always good when a stock is in play for potential entry and a continuation trade on this flat base breakout, showing potential in the short term. Spirit Realty Capital, another name, SRC in the REIT group, looks like it's going to break out above this pivot. This was the original pivot breakout zone, so it's a couple of percent above this zone. Add about 8 points on top of this. Gives you a target of about 53 to 54 to start taking profits. Annual sales and earnings continue to look okay. A little bit of a estimate revision to the downside. Annual sales and earnings, just keep an eye on it. What caught my interest was relative strength line climbing, stock at highs, above average volume, and decent annual sales and earnings. Universal Forest Products in the Materials Group manufactures lumber, composite wood, and other building products for the retail construction industry group. Looking for builders XHB to continue to move higher. Right at the pivot zone, pulled back last week. Looking for above average volume. Good annual sales and earnings. Could be better IBD metrics, but relative strength line is climbing. Like to see more volume. This volume breakout was exceeded everything that we've seen basically all year. Looking for a follow through and a continuation on UFPI in the short term. In addition to those stocks on the MarketSmith Growth 250 relative strength scans and blue dot scans, also keep an eye on the stocks that are colored yellow in the opening monologue and the stocks that are colored green. Those are TTM squeeze candidates and relative volume candidates, respectively. Potential trades for the week ahead. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I'll send out a watch list later tonight, 11:30 on the East Coast, 8:30 on the West Coast. Be sure to look for that in your inbox. I hope this helps. Take care, and we'll talk to you soon.